Okay, in this video we're going to look at setting up Gnucash for a VAT registered business. So VAT in the UK is value added tax. This is in tax imposed on sales, sale of goods and services. Now there's different tax rates. We're going to need to set up a sales tax table. The standard rate of VAT is 20%, the reduced rate is 5%, and the zero rate of 0%. Zero rated tax items include most foods other than from restaurants, things like children's clothes, public transport, books and newspapers. Reduced rates are things like domestic fuels, and standard rate applies to anything else. But you need to consider all three rates. So if you're a business with a turnover of more than 85,000, then you must be VAT registered with HMRC. And there are advantages for charities as well, because you can claim back the VAT on items that you purchase and other businesses. So in the example we're going to look at, I've just put it into a spreadsheet. We're going to start a business up, an event management business, or it could be a charity. We're going to purchase a laptop, a printer, a toner, some stickers and pens for this particular business from a company called Amagon. And these are the net values. This is the VAT on that, so that VAT is 0.2 times that value. This is the sum of the VAT. Sorry, the sum of the net values. This is the sum of the VAT here for all of these items we're purchasing, and this is the sum of the gross values. On the output side, we're going to run three events. We're going to run event 1, which we're going to be paid 3,000 for. We're going to have to charge the company that we're running the event for the VAT, which is 600, so the gross, we need an invoice of 3,600. And likewise for event 2, this is the VAT on that, that's the gross value. These are the totals for these three events we're running in this particular quarter. I should mention that when you're tax registered, you have to upload your tax VAT tax return every quarter of the year, every 3 months. So it's a lot of work. This is the sum of the VATs here of these values, and this is the sum of the gross values. Now when you come to submit your tax return, and I'm not an accountant, so you need to take advice from an accountant, you have to use a template like this, and then you have to save it as a CVS file and upload that onto the HMRC site. So this is all part of this Making Tax Digital thing that's coming to effect this year in April 2019, I believe. So I did a bit of research on this, and so you need to include your VAT in this period on sales and other outputs, which is 1,800. Where did that come from? That came from this value here. So that's the sales. That in our case was in this event management company when I set up was 1,800. I don't know how we're going to cope. This is VAT on EU member states. I'm not sure what you do here. Consultant, accountant, I don't know. We won't be in the EU, might not be in the EU after Halloween, so I don't know what you're going to do with that. So that's the sum of those two, which is 1,800. Now we need to reclaim some VAT. Now this is what you can't do if you're a sole trader. You can't reclaim VAT. So although you have to charge VAT, you can reclaim VAT. It can be advantageous if you're a charity and you're buying goods for charity. So the VAT we want to reclaim is the sum of the items, or the VAT we paid on the items that we purchased for setting up this business, which was 260. So it's that value there, and you notice that I link this tab using this in LibreOffice with this E10 value here in this tab here. Then this is the difference between the two. That's the net tax to be paid. So we, or not me, but the company would have to pay this amount of tax for the sales that we're doing here. Total value of sales, well, the total value of sales is this sum of the sales, sum of the events that we've held here, that we've charged for. And the total value of purchases on VAT. So I'm guessing they will use these two figures to calculate that you've to check. That's what HMRC will do. They have some little program which will check that if you put this figure doesn't tally with that, then they'll know something's wrong with your upload. So that's the idea. That's making tax digital. How can we start doing our bookkeeping with this in mind, with Gnucash? So let's start up a new business. So we're going to go next. We're going to create a business called, I don't know, let's call it Wonder Events. We're going to, contact person will be Mrs. Wonder. Phone number, I think you might have to put this in, so we'll just put some. Company email will be wonder@mail.com. We're going to have a company site, wonder.com. Okay. Now this company ID will be the unique tax reference, I believe, that you'll get from HMRC. I think it's a 10-digit number. You need to make sure you know that. Counters we're just going to leave as default. We're just going to try and get through this. It's the basics of this. We're working in pound sterling, we're in the UK. Now this is the important bit. What we need to do is we need to unselect the common accounts. We need to go down here to VAT accounts. So we've got, just like the last one, last video I did, the accounts payable, account receivable. We've got our assets. We talked all about these things last time. We've got our equity and expenses, etc., income. So we'll come back to these in a moment. Let's just keep going. Now these are accounts payable and receivable for this exercise. I'm not going to make sub accounts, I'm just going to make sure they're not placeholders, so we can put money, enter items into these things. Next, finish the thing, apply. We want to so let's create a folder called Wonder Events, and let's call this company Wonder Events. This is all fictitious, by the way. Okay, so we've done that. That's our account set up. Now this is where it gets more tricky than the last time. What we're going to have to do is set up a sales tax table. Let's just have a quick look at what we've got here, because it is slightly different to what we did last time. We've got our accounts payable, entities we are in credit to, accounts receivable, entities in debt to us. So I went through this last time. Our assets, remember they're something a company owns and controls that benefit for the company. So things like computer equipment, all that sort of stuff. This is going to be our liquid assets, our bank accounts, current bank. So I'll just leave it as main bank account. Sometimes you have a reserve account, maybe for paying your tax and things like that. That can be quite important to have some sort of reserve cash. Equity, we talked about that last time, left over for shareholders. So we may, in these bigger type companies, have shareholders and have to pay dividends. Expenses, really important to keep track of expenses. And income, of course, is your sales that you make on this, the events in this case you'll be holding. Notice here, so this is our liabilities, anything that's owed, and this is our VAT, which is we've got a VAT account now. Okay, so we didn't have that last time. So what we're going to do now is we're going to create some sub accounts, and we're going to create sub accounts for each of those tax areas that we talked about: reduced tax, standard tax. So on our input, so we want to, some things we might purchase which will be 0 rated. So we'll start off with reduced rated. So we say reduced VAT. And we put a description to remind ourselves what this is all about. Reduced VAT, and at the current time doing this video it's 5%. Okay, so that's on our input side. Now we need to create another sub account, and we're going to call this standard VAT. Put a little description to remind ourselves in there. That's standard. You can put what you like. I'm just going to put 20% because that's currently what it is. And then any items that are zeros VATed, we'll put 0 VAT, 0 VAT, and we'll put a description 0 VAT, and we'll put 0% so we know that we're charging 0 on that. Now on our sales, on our outputs, our sales here, we need to do the same thing again. So we need to go new account, and we're going to have reduced VAT, and remember we'll put a description on, so we'll just put reduced VAT, and that was 5%. Remind ourselves that we're dealing with that when we come to it. Another thing we want in our sales, we want to add an account for standard. That's the one we're going to use mainly. Standard VAT, which put a description, standard VAT, and that's going to be at 20%. And finally we'll put on our sales 0. New account 0 VAT, and description there is going to be 0 VAT, and that's going to be 0%. Okay, so we set up some sub accounts for our VAT here. What we have to do next is set up a sales tax table. This is a table which is going to link to those items and define the tax that we need to apply. So we'll start off with our, let's say, reduced input. Do it in alphabetical order, reduced input. Now on a reduced input we've charged 5%, so we need to put 5 in there, and we need to link it here to our VAT account, our sub account input and reduced. So that's the first one. The next one we want to have is a reduced output, so let's do that. Reduced output. Remember this is a reduced output of his 5%, so we need to put that into our VAT accounts here. It's an output, it'll be under sales because we're selling, and it's reduced VAT. So reduced output, reduced VAT, yep. New, so now we want standard input, standard input, and standard input, remember, is 20%, and we need to link that to our standard input. So we go to our VAT accounts, input, and we want standard, that's the one we want. New standard output, our standard output of course is 20%, and we need to link that to our VAT account, our output and our sales, and we want to link that to standard output. So it's done there. Then we want new. Next one we want is 0 input. 0 input. Don't pay any tax on that, VAT on that, so it's not. So we need to go down, link that to one of our VAT accounts. In this case the input 0 VAT. Finally we want 0 output. Okay, 0 output. Again, no VAT on that. We link it to which account. We go output, sales, 0. Okay, done. So we've done our tax table. Now when we set up our, so remember the last video we had to set up customers and vendors, so we're going to set our vendor up, and we have to be careful when we do this now. So our vendor number is 1 because we want to purchase things from a company called Amagon. The name is going to be Amagon, just making this up. I don't know where the address, let's just say they're in London. Email, say amagon@mail.com, that we did last time. This is what we have to do differently. We need to include a tax table. We need to say that we want to use a currency, and because most things we're going to purchase are we want standard input because this is where we're purchasing things. So we want to make sure that we calculate the VAT or the standard rate so that we can claim that back from the taxman. Okay, so that should be right. Let's create a customer just for sake of argument. So let's say our customer 1, and what's the company name? Let's say it's Scooby-Doo. Let's go Scooby. Let's call it Scoopy. Scoopy D. Let's call this one Scoopy D. As a company name, I don't know where this is based. Let's say it's based in Yorkshire for some reason. Let's say it's Scoopy@mail.com. Strange name. There we are. It's just made up. .com. Now again, billing information. We want to include a tax table. We want to have our currency, tax included. Yes, we want that. So this time, this is standard output needs to be applied to our customers. So when we're creating billing invoices, they're charged tax. Because that's the rules. If you're tax registered, you have to charge VAT to your customers, but you can claim VAT back from HMRC. So that's how I understand things. Let's save all that. Okay, so where were we with all this? So this is what we've set up so far with our tax table. Let's move on. Let's get a vendor and let's create a new bill. So let's say our vendor is Amagon. Let's say our bill's 1. It's very much like we did last time. 1. Press OK. Right, so let's say our bill is going to be on to laptop. That's a material thing. Expense account. Now that laptop's going to be an asset, so this time it's already set up that it knows with this template we've got assets, capital equipment, computer equipment. Right, now what price we put in there? Well, I think we have to put the gross price in there, and we'll check that. So if we go to the LibreOffice little demo that I set up, so our laptop, its net is 800, its VAT is 160, so the gross is 960. Let's try that. Let's put 960 in there, so that's what we will be charged. So let's enter that in, and let's look at the invoice so far. So we haven't posted, that's why we can't look at the invoice, I think. And we certainly haven't saved it, which we should do. Well, let's carry on. Let's go printer. That's a material item. And that's an asset. Equipment, it's 1. Sorry, unit price. So it should put quantity 1 there. I should put a quantity 1 there as well. Now we've got a subtotal here, that's what we wanted. What was the, let's have a look at the gross price of that one again. Printer was 360. So I'm just trying to make sure things tally up so I understand what's going on with this package. So it should be 300. So according to my spreadsheet, that's right, 300, and the VAT will be 60. So let's go back and let's have a look at this. What happens if I print the invoice? Right. Yeah, okay, so that's looking right because it's actually charged the tax here. Okay, so that's because it's the same order. That's right, that's looking good. Okay, so we must remember to put these quantities in. Okay, so let's we want to obviously buy some toner and paper because we can't do anything, can't do any invoices, any events. That's material. But this time, this expense, it isn't an asset. So we need to look down here. We need to look for VAT purchases office. That will do. Quantity 1. And just check on that. I put in that into the spreadsheet. So I put 120 for that. So we go there and we put a unit price of 120. Okay, standard input. So right, so that's our order. Let's save everything and let's post that order. Okay, post that order. What should we call it? Amigon computer order, something like that. Okay. You probably think of better names than what I'm doing this quite quickly. Okay, so we've done that now. Let's make sure we saved everything. So where's that gone? That's gone into accounts payable. So we owe all this money. We'll have to pay that in a moment. Actually, what we need to do is what we should do is we need to go and just add these stickers and pens, and these are 60 each, if you remember. So let's go back and do that. So let's say we need to go to our business. We need to go to our vendor again. New bill we could have a different vendor, but I'm not just going to set that up now. So let's say this is bill 2. We'll try and put them both on the same bill to speed things up. So we have a sticker, stickers, that's material. It's a consumable, so we need to put it under expenses, VAT purchases office, quantity 1, and the unit price was 60. So it's £50. So it's with the VAT. So what was the other thing we had? We had pens, didn't we? Need pens. If you got an event, presumably company, you need some pens. Expenses. What was it? Expenses, office purchases. We got quantity 1, unit price 60. That's the gross price. 50. Okay, so let's post that. So separate invoice. Post. Let's say call this stickers and pens. Okay. Right, let's do that. So what have we got? Let's save everything and look at our accounts. So at the moment we've got our purchases of, in our input, 260. Now that should tally up with that, which it does. So that is the bit that you would put into your summary sheet there for your VAT to be reclaimed on purchases and other inputs. So that works. That's very important. If you're a charity, you want to claim back all your VAT because you're just losing money otherwise. Okay, so that's that side. Now on the output side, what do we do there? We had a couple of events. We had 3 events. 1 3,000, one, so 3,600 was the first one. Let's just have a look and see whether we can pull that in before we run out of time with this video. So we want to go now. So we've got a customer, and the customer, we've got a new invoice. What were our customers? I forgot what customers were. It says Scoopy, wasn't it? Scooby-D was the company that we're dealing with. This is invoice 1. Invoice 1. And okay, so our description was event 1, whatever that might be. An action, what is that? Let's say that's a project. Income account. Income account will be sales, I guess. Quantity will be 1. The unit price was that 3,600 for doing that event. There was no discount. Okay. So what happens if I look at that? If I just save everything, what happens if I print just that invoice? Yeah, so we've got 3,600 VAT, so its VAT's been put on that. That's great. That's working. So that's the invoice we'd send to that company. Let's post that one. And we'll just call this event 1. So I think you should be seeing how we're getting on with this now. Now, let's go for business, vendor, new bill. Let's say we're going for Scoopy. Was it? It was Scoopy. Bill ID 2. Oh no, it's not. I don't want a vendor. I want a customer. So customer. New invoice. Invoice 2. We want Scooby-D. Billing ID 2. Let's press OK. Let's say this was event 2. I'm not doing any dates here. I'm just doing this. Let's say it's a project that we did for them. Inc. Where are we going to come in there? That's going to be sales UK. Quantity 1. And what was the unit price? I can't remember what I put in there. Let's just have a quick look. So this event 2 was 1,200. So we put in there 1200. That's done. And let's post that. Let's do these as separate things. Just check it all works. We'll just put event 2. Trying to keep them separate so we can see how things are progressing. And finally, business, customer, new invoice. We would have normally separate customers here, but this I don't want to spend time setting up separate customers. We'll just go with Scooby-D, and we'll have 3. Okay, so this time this is the bingo event. If you remember the bingo event, again, it was a big project we did for them, or it could have been a charity event that could have been done for the charity. So we want that, in this case, income sales, say quantity 1. And what was the unit price we did for that? It was 6,000. Big event. Unit price 6,000. No discount. Okay. Let's just save that. Let's print that invoice. Just check it's right. Yeah. So the net price is 5,000. The tax is that. So we know that's good. Let's just post that one. I'm not going to go too much about. Let's just call this bingo. I did in the last video about posting and processing payments, so you can go back and have a look at that. But you can see now that we've got accounts receivable is 10,800, and accounts payable that we owe credit to is that amount. What we're interested in are these figures here because of the VAT returns. We've got 260 and 1,800. And if you remember from our spreadsheet, 1,800 is what you put in that box, and 260 is what you put in that box. So that's how you can use Gnucash to start to set up a VAT registered company or charity. Now obviously you'd have to go back to the other videos, but if you look back at the other videos I will tell you how you can go and pay for these things. There's obviously a lot of money here is owed to this company, may not have been paid, so in this particular case we need to go there and we would need to Scooby-Doo is our customer. We process that payment, and where we're going to process it to, we're going to process it to our current account. We don't need to select Scooby-D, accounts receivable, current account. Which one do we want to post? We'll post that. Process. We'll process that one. So that one now has been processed. So we have a paid payment here of 3,600. So again, you'd have to keep chasing these payments up. Let's save everything. So let's go back to our customer. Let's find an invoice. It's 2. Let's say invoice ID 2. What does that do? Okay, so that's it. So we can process that. Do it this way. It's a different way of doing it. Process 2 into current account. Yeah, so we've done that. And close that. So we can do it. There's another way of processing your payments. So now if we save everything, go back to your accounts, you can see the accounts receivable has gone down. Our actual bank account is now got 4,800 into it. So you could put some more money in from the owner's equity, which we did last time. But anyway, I think that's long enough for this video. I think we've set the basic things up. You can see how to do VAT VAT registered returns. So I think that shows you the other way of doing the accounts. Now just be mindful, if you're doing VAT, cover a couple of things. You have to make a VAT return every quarter, and that includes charities as well. So if you're setting up a food charity, you need to do that. You need to also check with your accountant what is exempt and what isn't in a charity situation. It's a bit more complex. And if you're a business over where your sales of goods and services exceed 85k, the research I did on this, so if you exceed 85k in the 12 months to any month end, you must register for VAT within 30 days. So that's very important, otherwise you'll be fined. And you must make these VAT returns. And if you don't make the VAT returns, there's penalties. So you know, there's a lot more to being VAT registered than meets the eye. Okay, so hopefully that's helps a bit with getting started with a VAT registered charity or company.